Welcome to the Tradier Rundown. I am Jim Urio, and that guy over there is Bob Iacchino. We are the hosts of the Trader's Edge, that is live 3 o'clock every Wednesday Central Time, and then it's broadcast on YouTube shortly after. Bobby, how are you?
Good. How you doing, Joey?
Good. So, I spent last week, we're going to talk about corn and agriculture commodities today.
Yep.
I spent last week at an agriculture conference. I spoke in Phoenix, Arizona. AgView Solutions put on a conference. There's probably 400 farmers there. I learned more about the actual farming because I've traded agricultural commodities before, but mostly on a technical basis. Corn has absolutely plummeted. And it is so fascinating to hear them tell us why. It's basically the weather's been great. It wasn't in several years past, and it's gone down toward that $4 a barrel. Now, that being said, for almost 4 years, it's spent between $4 and $3 a bushel. It's heading to that level. If you looked at the charts, what do you think of corn?
I haven't looked at the charts, but I really like what they talk about in the rundown here, because I'm always saying that the only market that has a natural upward bias is the equity markets. And that's actually not true. The agricultural markets do, because of something they point out in the rundown about population growth. Population growth is not shrinking. It's more mouths to feed. It's sort of a tiny, tiny, tiny little tailwind behind ags. And then you look at the particular geopolitical situation we have now, and it's more likely to be supply disruptive than supply additive. And what I mean, do you think that the 2 or 3 or 9 wars that are currently going on are going to turn into a ceasefire in Russia, Ukraine? No. Or do you think there's going to be more hotspots around the world, or the hotspots we have are going to get hotter?
It seems like the hotspots are getting hotter, but I will say this, is that the Ukraine-Russia conflict, and it did push up the prices of commodities, but the bid didn't last, despite the fact that the war has. Right. So I do find that interesting. And I will add something else too. It used to be that we here in the Midwest, I'm coming to you from the Midwest, we were just an enormous player in the space, and we still are an enormous player. But the only one time I made a trade in corn was the whole when it's raining on LaSalle Street, sell corn, which I did do when we were in a little bit of a drought. Now these guys tell me, the farmers, that it's such a global commodity that certain weather patterns in certain areas have an effect, but not as big one. Do you have any idea about that?
Yeah, I do. And that's why it's really important which wheat contract, which corn contract you're looking. The close parallel I can make is Henry Hub natural gas is very, very much affected by U.S. weather patterns. It's not unaffected by the others, but at the same time, same kind of dynamic where U.S. weather matters more because it's the product that's here. Also, side note, LNG leases being suspended for now, that could have an effect. And you combine that with ags, because LNG is often used to process the ags.
That's interesting. Okay, so here's my take on the chart of it. If you look at the 20-year chart, like I said before, 4.5 years were spent between the $4 and $3 a bushel. If you're trading the futures, it's 400 and 300. We have been cascading lower towards the top end of that range. I think it's going to provide significant support. It just seems it's so well defined from a technical standpoint. I think it is. Now, tell me this: if people want to trade corn and don't have futures accounts, where do they go and do it?
So they're looking at several ETFs. One of them is corn is actually the ticker for the ETF. There's another one for soybeans, SOYB. There's another one for wheat, WEAT. I looked at all of these today, and I really like DBA. DBA, the chart looks healthy, and I've seen the past performance of it, and it's been pretty stable. They got a good dividend yield. It's an agricultural ETF product, a portfolio of ETF products in the agricultural space. So I really like that one. I also like Deere, which if we're going to get big harvests, there's going to be better equipment sales. So I like Deere as well, and the things that are mentioned in the rundown. The other ones, they look fine. They'll be the ones you look at when these others outperform as sort of a catch-up trade.
Sounds good. Okay, this has been Tradiers, the rundown. I'm Jim Urio. That's Bob Iacchino. Please tune into our show, Tradiers, the Trader's Edge, 3 o'clock live. I say everything in Chicago because it drives all the East Coasters and Bobby, who's in Naples. Chicago,
or Eastern time.
So we do Chicago time, particularly when we're talking about agriculture. 3 o'clock Wednesdays. It's live. See you there.